Hello everyone. Today I am going to speak about RBI, Reserve Bank of India, Governor and functions of RBI. We all have heard the word RBI. So RBI is the authority responsible for regulating various things which are related to economy. So let's learn in a brief way. So RBI. What are the functions done by RBI? So the one of the functions is maintaining the monetary as well as banking system across the country. So it regulates, controls, directs, operates the banking and the monetary system. RBI Act 1934 was passed and finally it established in 1 April 1935. So now I am going to discuss about governor. So basically governor has a function of issuing license to open banks and it also set parameters for the financial system. He is responsible for taking decisions related to financial as well as monetary system in the country. He or she is appointed by central government and the period of tenure is of 3 years. Almost the age limit is between 30 to 40 years. Sir Osborne Smith was the first governor of RBI and presently Sri Shakti Kanta Das is the governor of RBI of India. So what are the functions of RBI? Basically it has 5 functions: currency authority, banker to the government, banker's bank, controller of money supply and custodian of forex. So forex, what does the word forex means? So forex means foreign exchange. It is a short form always written to represent foreign exchange. Currency authority. So we all know that RBI is responsible for note printing. So it issues paper currency note and due to its sole authority, it brings uniformity in the note circulation. It also performs many functions like it enables the government to have supervision as it is the sole authority. So government always does supervision whether everything is as per benchmark or not. It also helps in stabilizing the internal and external value of a currency and also ensures public faith in the currency system. Now I am going to discuss about banker to the government. So RBI not only plays a role of banker but also as an agent and financial advisor. So as a banker, it maintains accounts for keeping balances for the government and carries out exchange remittance and other banking operations. It also provides loan and managed debt. Basically, as an agent, central bank is responsible for managing public debt also. And as a financial advisor, the central bank advises the government from time to time regarding economy and monetary matters. So now I am going to discuss about banker's bank, controller of money supply and custodian of forex, which are the important function done by RBI. So the word banker's bank means RBI is responsible for controlling and regulating other banks by maintaining cash reserve, giving lending facilities. So RBI is an authority which keep a certain proportion of deposit of bank with the hands of them, known as cash reserve ratio, to meet its financial requirement. It also gives lending facilities like loan facilities when it comes to requirement of a bank. And what do you understand by a clearing house? So clearing house. As central bank holds the cash reserve of all commercial banks, it is easier for them and more convenient for them to act as a clearing house. All commercial banks have their account with the central bank and central bank can easily settle claims of various banks against each other by making debit and credit. So now I am going to tell about custodian of forex, like foreign exchange reserve. So it maintains the foreign exchange reserve and also helps in establishing the external value of a currency. When any person living in other country is coming to our country, he must their RBI, like in our country where there is RBI and we want to go to another country, we can exchange our currency with the RBI and they would provide the different currency of other country and we can exchange and visit to that country in their own currency. So it acts as a regulator of foreign exchange reserve, helps to exchange currency, external value of currency fixing, as well as many other functions like pursuing a coordinated policy towards balance of payment situation, and regulations and rules regarding foreign exchange. So now I'm going to tell about controller of money supply, which is one of the important functions done by RBI. So let's learn about repo rate and bank rate. So repo rate is a rate at which commercial bank give loan to the normal bank or commercial bank to meet short-term needs. Whereas bank rate is the same thing, the only difference is that it lends to the commercial bank for long-term needs. So repo rate is for the short-term requirements and bank rate is for the long-term requirements. So how it affects the money supply? So when there is increase in repo rate, what does it mean? So it means that central bank is providing loan to bank and they increase their rate. So if there is increase in repo rate, which means that central bank increases their repo rate. When they increase their repo rate, automatically bank will charge higher rate of interest from the general public. So when the bank charge higher rate of interest from the general public, it discourages the normal buyer or the customer or the general public to take the loan, affecting money supply of a country. Vice versa happen when there is decrease of repo rate in our country. When RBI decreases repo rate, bank also charge lower rate of interest from the customer and people generally get ready to take the loan. So in the same patterns goes with the bank rate also. The only difference is repo rate is for the short term and bank rate is for the long term. What is open market operations? So open market operations refers to buying and selling of government securities by the central government from the public or the commercial bank. So how does it affect the money supply? So when RBI sells security, it reduces the reserve of bank as they pay for the security. The commercial bank pay for the security and it reduces the reserve which they have. So due to less cash availability, the bank charge higher rates from people and people generally discourages from taking loans at a higher rate, which affects the money supply. Vice versa happen when RBI purchases the security. When RBI purchases the security and give cash, the bank has more cash now and it is able to give general public loan at a lower rate and it raises the bank ability to give credit. So this is how the money supplies got affected. So now we are going to learn about LRR. So LRR stands for legal reserve ratio and legal reserve ratio are the legally things or the legally reserve which should be maintained by a commercial bank and it is regulated by RBI. So let's learn about CRR and SLR, which are important components of LRR like legal reserve ratio. So CRR is the minimum percentage of the cash to be kept by commercial bank with the central bank. So when the CRR, it means cash reserve ratio, is increased, certain amount of cash is reserved. They are not able to give it to the general public. So it limits the credit creating power, which means that due to less cash, they charge higher from people and it discourages from it. The normal people generally discourages from taking loan and it affects the money supply. SLR is same, just the difference is that they are in the form of liquid assets. So the same patterns goes with everyone. The only difference between CRR and SLR is in the form of liquid assets or in the form of securities, whereas CRR is in the cash form and near cash things. So it must be maintained by commercial bank as per the guidance of RBI to regulate the money supply. Thank you.